So welcome everybody to our webinar on the rich business owner tax loophole. My name is Juan Carlos Ordonez. I'm the communications director here at the center, and I'll be leading this webinar. So just to let you know what's on the agenda, I'm gonna be doing an overview, maybe 10, 12 minutes about this tax loophole, sort of how it got started, who's benefiting from it, and what we might do about it. And then after that, we're going to open it up for your questions, and hopefully we'll be able to answer them. If you look at the top of your screen, if you look at the Q&A function, that's where you can send us your questions. So feel free to send them as we go along or at the tail end, and we will do our best to answer them. Before we get started, I just want to take a moment to thank our supporters. Our donors make this webinar and all our work possible. So thank you very much for supporting the center. So let's get started with the webinar. And our story with this tax loophole begins in 2013 with the 2013 special legislative session. They came to be known as the Grand Bargain. And the Grand Bargain had several big pieces of legislation. It included PERS reform. It had legislation that limited the ability of local governments to regulate GMOs. It had a piece on education funding. And it also had a tax package. And one of the biggest pieces of that tax package is what was a tax break on pass-through income, or what we call the rich business owner tax loophole. By the way, the Senator Larry George, who's pictured on the bottom right hand of your screen, was one of the main proponents of this piece of legislation. So what is the tax loophole for rich business owners, the tax loophole on pass-through income? Well, those who can claim it have to be an active owner of an S corporation, a partnership, or a limited liability company. So pass-through businesses are not taxed, the profits of the business are not taxed at the business level, but rather the profits are passed on to the business owner and are taxed on their personal income tax forms. So you have to be an active owner of the business in order to be able to benefit from this tax provision. You cannot be a passive owner, just an investor in the company, and get the tax benefit. Another limitation on it is that you have to employ at least the equivalent of one full-time worker. Now, if you qualify for this tax break, what do you get? Well, what you get is a lower tax rate on your pass-through income, the income that you receive from your pass-through business. And that's good, that lower tax rate, and there's it's on a sliding scale, but the lower tax rate that you get is good for up to $5 million of pass-through income. So you would be paying, in essence, a lower tax rate than you otherwise would without this tax provision. Now, we now have data on how much this tax break is costing the state of Oregon. The provision, when it was enacted in 2013, but it first took effect in tax year 2015. And in 2015, it had a cost of $66 million. Then the cost went up the subsequent year to $95 million in tax year 2016. And in the current budget period, and of course, Oregon budgets on a two-year basis, in the current budget period, it estimated it'll cost about $200 million. And the analysts at the Legislative Revenue Office are projecting that its costs will continue to rise to close to $300 million in future budget periods. And that's significant money in the context of Oregon's budget for sure. Now, where is this money going? Who is benefiting from this tax provision? Well, we can see that in the next slide, which shows the breakdown of who's getting the benefit, who got the benefit in tax year 2016, the most recent data that we have. So as you can see here in the bottom of this slide, that group is the very few folks who have passed through, who have income above $500,000 a year, who made more than $500,000 a year in the state of Oregon. And that group as a whole is collecting about 69% of the tax benefits from this tax provision. And just to put that in context, to be a member of Oregon's top 1%, and of course we've all heard a lot about the top 1% in recent years, but to be a member of Oregon's top 1%, you need at least about $390,000 a year. So the folks that are capturing more than 2/3 of the entire tax benefits from this provision are well entrenched in Oregon's top 1%. They are the very well off. Now, as this slide also shows, folks making $100,000 or less together get about 1% of the tax benefits. And folks making under $100,000 in Oregon comprise the vast majority of Oregonians. So this really shows that it's a tax provision that's heavily skewed towards the top of the income ladder. So let's dig a little bit deeper into the kinds of tax benefits that folks are getting. So let's say you are an owner of a pass-through business with income of about $500,000 a year. In that case, your tax savings from this provision are about $11,000 a year. Now, what if you are doing much better than that? What if your income is $5 million a year from your pass-through business? Well, in that case, your tax savings come to about $78,000. But what if you are say a teacher, a firefighter, or pretty much anyone whose income comes from a paycheck? Well, in that case, your benefit from this tax loophole is zero. Because of course, you have to be an owner of a pass-through business to be even eligible, to be able to qualify for this provision. And this really highlights the structural inequity built into this tax loophole. That it treats workers, employees, those who make a living through a paycheck, it puts them at a disadvantage compared to the owners. And as a result of this tax provision here in Oregon, we have the situation where partners at law firms, doctors who own their own private practice, accountants, again, who own their own firm, are paying a lower tax rate than their paralegals and assistants. And it's really just, it really highlights the inequity of this situation. Now, when this tax, back in 2013, folks like Senator Larry George and others who proposed this provision sold it on the basis that it would create jobs. But that really is a bogus claim. There's really no evidence that this is creating any jobs here in Oregon. And in fact, this claim is just absurd on its face. If you stop and think about it for a moment and think about the examples that I gave earlier, many of the folks who are getting the tax benefits from this might be getting $5,000, $10,000, maybe even $15,000. But that's just not enough money to hire anyone. And if you're one of the few folks who maxes out on this tax provision, in other words, has $5 million worth of pass-through income, sure, the tax savings from this would allow you to hire someone. But the fact is that if you have $5 million worth of profits in your business, you don't need the help from the state of Oregon to hire someone. Not if it makes business sense, you will hire someone else. So there's really no good justification for giving a lower tax rate to pass through income. Now, another thing to keep in mind is that many of the folks who are benefiting from this Oregon tax loophole just got another tax giveaway thanks to Congress. The big tax package that Congress enacted in December contains its own tax loophole for pass-through income. Now, it's not the same as the state one, as the one here in Oregon. The federal one is a tax deduction, and it's a very complicated one. But safe to say that some of the folks here in Oregon who are benefiting from the tax loophole just got another gift from Congress. So that brings us to what should we do about it? And in our view, there's really only one good solution, and that is to close the tax loophole. Closing the tax loophole would save Oregon in the current budget period about $200 million. Certainly in future biennia would save us hundreds of millions of dollars that would be much better invested in putting more teachers in the classroom and in providing the essential services that Oregonians need. It would also, it's really the only way to remove the inequity built into this structure, where it puts employees at a disadvantage compared to the owners of the business. Now, there is a provision, there is a bill or bills currently in the legislative session that address the tax break on pass-through income, and it's a situation that's rather fluid and it's moving fast. I'm going to have my colleague Daniel Hauser, who was in the Capitol yesterday, say a few words about the current situation.
Thanks, Juan Carlos, and that was a really great presentation on this issue. Right now, there are various amendments floating around the legislature that address both the federal tax deduction for pass-through income, as well as our state reduced rate, of which you focused on in this presentation. Things are, like I said, moving really quickly, though, and because it's a short session, of which they only have 35 days to get their business done, there are really a lot of amendments bouncing around that are popping up last minute that are changing this idea and doing different things with it. But I think the most important thing to know right now is that there are bills in both the House and Senate that would change how Oregon's reduced rates for pass-through businesses are treated. One of them, and the one that we think is perhaps the more effective tool, would be to cap this at $250,000. So all of the reduced rates in excess of $250,000 that are on this policy would be eliminated. Our preference, of course, as you noted, would be to completely eliminate this. And the reality with having that $250,000 part of the reduced tax rate still in the law is that folks making $5 million will still be getting a few $1,000s each year in tax breaks, and that's unacceptable. That said, there are other pieces of legislation that react to this and attempt to change this in various ways. And I won't go into extreme detail, but folks that want to know the details, please don't hesitate to reach out to me or Juan Carlos afterwards, and we can go into greater detail on each of the bills. What I will mention, though, for folks that are really interested and excited about this concept and want to see something done, is that I will mention, just for your information, that it's Senate Bill 1528-3, the amendment there is very important, and also House Bill 4026-2. And again, folks that didn't catch those numbers, feel free to follow up with me. But I think the most important thing folks can do right now is to contact your legislators. Let your legislators know how you feel about this tax break and why it's inequitable. And we've actually created a really helpful method for folks to easily contact both their representative and senator in Oregon just by entering their address and customizing a message saying why you think this is a terrible policy. And on your screen now, you should see the link to that. It's ocpp.org/action-alert. And that's a really easy tool that we put together. And we'd encourage folks to not only fill it out, but share it with your friends, family, random people you meet on the street, and just really get the word out about how inequitable this policy is.
So with that, we will turn it over to your questions. So feel free to send them in, or maybe you already have.
So one of the questions we got early on, and this is Daniel again, that I would like to make clear to everyone is that we will be sending out a recording of this webinar to everyone who registered, whether or not they were in attendance, although we do certainly appreciate those of you who are watching live. But we are recording this and we will send that out to everyone. One of the questions we received from Nancy was asking, is the cost rising as more people become aware of this bill? And I think what we know from hearing from testimony from CPAs and various other business owners is that this really wasn't well advertised or marketed, and folks didn't know about this when it first went into law. And so there are a lot of people who are now taking advantage of this because it's been flagged to them by their CPAs or other tax preparers. And so as more and more people do become aware of this bill, of this tax policy, more and more people are using it. And we've also seen a general trend over the last few decades to where more and more folks are setting up their businesses as pass-through businesses, as S corporations or LLCs or partnerships, and therefore are more able to take advantage of this tax subsidy. Another question we received from Adam was asking if we can explain the federal pass-through income tax deduction a little more. It is many of pages in truly understanding what this federal pass-through tax deduction does is really challenging. But the simple version of it is that between the income level of $300-ish thousand and $400,000, this benefit begins to phase out. But what the benefit is at a base level is that 20% of a pass-through business's income is added as a deduction from their total taxable income. So it becomes a really substantial tax cut for pass-through businesses that qualify. And business industries are particularly called out as not being allowed to use this over that income phase out. But many businesses still will be able to use it in excess of that 300 to 400,000. And businesses that have high W-2 wages, have high property values as it relates to their income, will be able to continue using this well in excess of those income phase outs. And it's really important to note, and I really want to underline this, connecting to this federal tax deduction that was just put into law in December will cost Oregon almost $200 million in our next, really in 2018, in this tax year. And that amount will actually rise over the coming years to almost $300 million in just a single year that Oregon's revenue will lose as a result of that information.
So we have another question from Les Rogers. Will this? Oh yeah, we already answered that one. So do we have? See, are there more questions?
So one of the questions I saw was asking if we could repeat the bill numbers. Senate Bill 1528, and that's the -3 amendments. The fun part about this is that a number of bills have already been gut and stuffed, completely deleted and had the text replaced with new provisions. And that's why the amendment numbers on these are really important. But that in the Senate, it's 1528-3, and in the House, it's 4026-2. So those are the amendments on those bills that are currently up in the air.
See,
so someone asked about which committees are currently working on this bill. Both of those bills are in Senate Finance, or I should say the Senate bill is in Senate Finance, and the House bill is in House Revenues. These are both tax mechanisms. That's where they'll be originating and starting out. And of course, as we know with the legislative process, once it gets through that chamber, it will go over to the next chamber. And what we understand right now is it's most likely that this issue will be addressed with the Senate bill, 1528-3. But there are so many things changing every day, and who knows which one of these will end up becoming law. And so it's important that folks, I think the best things people can do rather than spending too much time worrying about the individual bills is to really let your legislators know that in principle and really as a function of good tax policy and of your preferences as one of their constituents, that they need to eliminate this pass-through tax reduced rate.
Do we have any more questions?
Yeah.
So there's a question from John. Who has joined the coalition? What is the plan to reach out to other groups?
Yeah, thanks, John. That's a great question. So right now we're involved in a coalition called the Coalition to Fix the Business Owner Tax Break. And we've been meeting with legislators and really working hard to get the word out about this really poorly designed tax policy. Right now, there are a variety of folks in the coalition. I believe we have about 20 members, including a number of really active and really impressive groups that we're really thankful to have on board. We haven't, as a coalition, made it a point to sort of publicly list our members and really try and push out as a coalition. It's really an effort to coordinate our work and make sure that we are unified in making it really clear to legislators that this tax break needs to be addressed. And if anyone is interested as a representative of another organization or just as a really active individual that would like to engage with this coalition and be a part of it on the ground level in Salem, please don't hesitate to reach out to me, and my contact information is, of course, on OCPP's website.
If folks have any more questions, please use the chat, the Q&A function. So there's a question from Wendy. If this loophole is closed, can the $200 million be used to either fund future Medicaid shortfalls or schools in limiting class sizes? The answer would be yes. This money is, the money going towards this tax break, tax loophole is coming straight out of the Oregon General Fund. So certainly the legislature would be able to use it to help cover the cost of the Medicaid expansion, and certainly to put into our schools and other essential services that are paid for by the through the Oregon General Fund. One of the here we got another question. It says it's maybe tangent. Just wanted to let you know that all the community colleges are in desperate shape. We may have colleges that will need to borrow, make payroll this summer. So yes, there's clearly community colleges and many other areas of our educational system are in a chronic state of underfunding, and certainly the money going towards this tax break is really a misuse of Oregon revenue. So certainly putting it into community colleges or pretty much anywhere else in the state budget would be a better use of this money. Another comment that we got was from Elaine. Wasn't there a bill last legislative session that would have done something about this? Yes, the answer is yes. There was an effort in the 2017 legislative session to reform this tax break. People referred to it as the suits and scrubs bill, because it recognized, as I mentioned in the presentation, that right now we have a lot of sort of well-to-do lawyers and doctors paying a lower tax rate than their assistants, and so these types of professionals are sort of a prototypical type of person getting the tax benefit. And what it would have done, it would have eliminated certain professions, certain lines, certain industries from qualifying for this tax break, and also increasing the amount of employees that you must have in order to qualify for it. So that bill actually passed the House, but it died in committee in the Senate. So hopefully the Oregon Senate can do better this time around.
And another question we were asked was asking whether or not and how Oregon would go about decoupling or disconnecting from the federal pass-through tax deduction. Right now, they're dealing with these two issues, the fixing or hopefully eliminating, but the changing of the state pass-through reduced tax rate, as well as disconnecting from the federal pass-through income tax deduction. So obviously these are kind of hard to separate, but the federal one is the deduction, the state one is the reduced rate that we've spent most of the time on today. And both of those bills I mentioned earlier have provisions in them that would not only make the changes that we talked about with the $250,000 cap on that pass-through income reduced rate, but would also fully disconnect Oregon from the federal pass-through tax deduction. And combined, those will, if passed into law, save Oregon hundreds of millions of dollars a biennium that could then be directed towards community colleges, as was mentioned, or any other priorities that the legislature wants to invest these funds in. So we are actively working on and really pushing to ensure that we are disconnecting from the federal tax break as well as fixing Oregon's. Right now, another question was brought forward about which senators or representatives to focus on. I think letting both chairs of the Senate and House Finance and Revenue Committees know how important this is a good step to take. Realistically, right now, this is working through a lot of backroom negotiations, and we believe that both of the chairs are really interested in seeing something done on these issues. But letting them know how important this is, I think, would be really important. And I really think that we need this to be something that in the Democratic and Republican caucus meetings, they're thinking about and talking about. And that's why it's so important that folks just contact your legislator. Right now, this isn't a situation where we have one swing vote that we need to flip to get this passed. It really is a situation where we're just trying to drive the message home to every member of the legislature how important this is. And that's something you can do by filling out that action alert and really communicating to your legislators how bad this policy really is.
So if you have any final questions, we'll give it a few seconds here. We don't see more coming in. So I just want to thank you for taking time out of your busy day and joining us on this webinar. And we will be holding more webinars going forward. I hope you will have an opportunity to join us. And just once again, wanted to thank our supporters who make this work possible. So certainly feel free to send us your feedback on this presentation and send us, myself, Juan Carlos, and Daniel, any questions you may have about this tax provision and any other final thoughts you may have on it. So again, thanks for joining us.
Thanks, everyone.